there's been a huge push towards frictionless payments. If you're good at what you're doing and nobody else or very few other people are good at that, you, your team, your company will invariably taste success.
What disruptions do you see unfolding in this payments industry as a whole? Hello and welcome to Startup Story Spotlight. This is your host Lata, and joining with me on today's episode is a fintech enthusiast who's also the CEO of Datanimbus, Mr. Sandil Srinivasan. Datanimbus as a company is building what is called as the next generation AI powered payments and automation software for all the businesses that think digital, because you've seen, right, digital economy has seen a boom in the recent years, followed by fintech, and you can only imagine millions and billions of dollars when I say that. So if you're also curious about what's next in the payments industry, what's next in the banking or automation industry, then you should definitely check this episode out. Hi Sandil, thank you so much for joining us on this conversation. Excited to have you with the insights you're going to bring to us. Starting with the first question, tell us a bit about your personal journey and what was the idea, what was the vision behind building Datanimbus and its flagship product Finhub.ai. Go on.
Thanks. So, thanks for that, Lata. I think when we look at the evolution of payments, one of the interesting things is that payments has not really changed, and ironically, it's changed a lot from the days where we used to walk up to people and exchange cash to where it is today with UPI and QR codes and all of that. And what's very interesting to know is that there's been so much of a shift in how people now look at payments, both in terms of the number of payments that they do in a day, right? We used to do maybe one ATM transaction every 4 days, and now we do probably about 8 or 9 UPI transactions a day. So there's been such a big mentality shift that it's suddenly kind of made everyone realize that this is a space that is worthwhile looking at more closely. For the last decade and a half, we've seen so much of focus on that. And where I've kind of started to get excited by this is about 11 years back, 11 or 12 years back. I was part of a team that designed a software for a bank in Amsterdam as part of a new compliance in Europe. So Europe created this region called the Schengen region, where you can travel from one country to another without a border. Similarly, they created a region called SEPA, which is where payments, movement of money from one country to another, can happen, quote unquote, without borders. In other words, it will be treated as a domestic payment. And complying with SEPA and making the whole payment engine work for SEPA was the start of my personal journey in understanding how do payments operate at a global scale and what it takes to build that. At the end of that project, which was a couple of years, I started to realize this is extremely complex and takes so much of time. I mean, that organization pumped in double-digit millions of dollars just to build the basic software. And then I kind of thought about, as when you're a kid and you're playing with toys, later on when you grow up and you start building software, there's this inspiration that we kind of draw from Lego blocks, right? You have these small Lego blocks that you can piece together and make something completely unique out of it. So the idea was, how can we actually go ahead and take all these different nuanced requirements around payments in terms of speed, velocity, and rules and scrutiny and all the things that it takes to really move money, and assemble them like Lego blocks to kind of deliver an outcome, not have to spend 2 years and millions of dollars doing basic movement of money from point A to point B. And that was the kind of inspiration to figure out and say, okay, how can we take a step back and create a vision of what a payment architecture should look like, and how can we make it simple and easy for financial institutions to build and kind of set that up. So that's been the vision and inspiration, and the idea is basically to make it simple, fast, easy, cheap for people to manage and maintain payment software at scale.
Understood. And I could pick up two or three things, and we'll talk about that. One being how you talked about the thought process that you mentioned, picking up pieces and then making it simpler for the other parties. We'll talk about your thought process for sure. But before that, tell us a bit, elaborate a bit on the specific industries and the stakeholders that stand to benefit from this product as a whole. How do you help them directly or indirectly?
So typically when you look at a financial institution and the need to invent new ideas and execute on that is driven by market dynamics and usually otherwise by regulations. So the two teams that we work with the most, besides the technology teams who actually are the ones who help us set up all of this, the two teams are product teams and risk teams. So basically, in any financial institution, typically a product manager within the organization keeps an eye on the market, and then they realize there's an opportunity to offer these kind of banking services and figure out how we can move money and make revenue around it. But to solve that, we need these technology building blocks. So the product teams are the first ones that really understand the value proposition in terms of what they want to achieve and how we can help them achieve that. The risk teams are the second participant of this whole process, where they're like have regulatory compliances in terms of, before I move money, I want to validate, is this a fraudulent transaction? Is this business that I'm making a payment to, are they into gambling or crypto or something that requires additional scrutiny? How can we kind of ensure that there are right risk controls in place? So people wearing a product persona who are trying to create a net new product offering, and people wearing a risk persona who are trying to ensure that the movement of money happens easily, but with all the rules around it, both the regulator rules and the bank's rules. Those are the two primarily stakeholders within the organization that get the benefit out of that. And the way we see it is, these are net new revenue streams for a financial institution. So it's not just a value added service, it's a whole new business model altogether that they can kind of get the benefit of. So
How
invariably, the sales folks as well start getting excited about what we offer.
makes sense? And how do you approach them in the first place?
Oh, we do a variety of things. It's still early days for us as an organization, but in terms of, we have a lead gen process that basically goes and talks to prospects in terms of what we can do. We also participate in a few events. We've recently participated in a couple of events where we've sponsored specific parts of it. Um, so far, the business has been built through references and word of mouth, customers who are happy referring us to other customers. But I think as we scale and grow, creating a bigger brand awareness is kind of part of how we'll do it. Yeah.
Fair. And actually, no matter how big you create a brand, I think word of mouth is a good indicator of how good a business is doing, right? And
Yeah.
how much of the value it is bringing on the table for the people, right?
Yeah.
So that's great. Tell us a bit about the industry as well. So, what disruptions do you see unfolding in this payments industry as a whole?
Yeah.
And where exactly do you think your company would fit in for that?
Yeah. So first, before we talk about disruptions, it's important to understand that banking has kind of become like electricity in some shapes and forms, right? The same exact product and services, and it's very difficult for one electricity provider to come and say, "Hey, I'm going to offer you better electricity than the other one." It's kind of become exactly identical, and it's very difficult to differentiate other than customer service and interest rates and things like that. But that's the challenge, but that's also the opportunity. The product teams within the financial institutions that figure out how to create net new product offerings that create that more sticky relationship between them and the customer, they're the ones who are gonna rule, and break the inertia that is there today, where people are reluctant to move from one bank to another. So we see a few trends. There's been a huge push towards frictionless payments, which is, I think it started off with Uber, right? you move from point A to point B. You don't carry cash. You don't worry about change. You don't argue with the driver on where to start and where to stop and any of that. It's you just tap on the app and you hit a point, and then you kind of remove the whole friction around it. So that frictionless journey of booking a ride has also translated into a frictionless journey of making payments, and you see that throughout the whole industry. This has kind of come from the whole gig economy and the digital commerce rise. So reducing friction in payments continues to be a very, very important focus area for anyone in the industry. We also see the birth of, or rather the rebirth of AI/ML. OCR and artificial intelligence has been around for a long, long time. But today, I think we have a much higher degree of sophistication and awareness for people to consume these technologies, which makes it very easy for us to go ahead and do things like accept information about a merchant and then figure out through all kinds of information, public information, GST filings, credit risk analysis, whether there is a risk of making a payment to them or not, and then doing some scrutiny around it. That is very powerful because it means that we can protect interests while making out a payment. So there's a whole birth of new intelligent automation capabilities that has kind of changed the way people think about what is even possible. And I think the last trend that we are seeing now is the complexity just keeps on increasing. In the past, it was as simple as, for instance, me moving money to you. But if you're buying a sandwich on Swiggy or DoorDash, and you pay some amount for it, like 200 rupees, that 200 rupees now needs to split into four ways, right? There's a commission for Swiggy, there's a commission for the restaurant, for the delivery partner, maybe the payment gateway. And so one payment becomes four payments, and a million payments becomes 4 million payments. And that just has its own complexity around how to handle that. And I think that trend of removing friction, better automation, and then the increasing complexity are really where I see, the whole payments industry going towards.
Fair. There's a growing concern as well, which is the frauds, right? Digital frauds that are happening in the transactions, in the payments, and so many leaders in the space have also expressed their worries for the same, right?
Yeah.
So, as a company founder, as a CEO, what do you think? How do you prioritize and take care of this aspect of this industry?
Yeah, frauds are going to be, the thing about, as you do more and more digital payments, as you take money out of people's pockets and put them into phones and wallets, as you move people away from branches towards mobile devices, it's invariably going to increase the opportunity for fraudsters to kind of come in and do more and more. So when we look at fraud in its own space and the whole cybersecurity aspect of it, there's so much of investment that happens today and continues to happen today on performing the right scrutiny on any action that happens within a bank, whether it is opening an account or getting a loan or doing a payment. The thing is, payments historically, even if you go back 100 years or thousands of years, it's always been about two things: moving money and the scrutiny that's performed on moving money, right? So the exchange of funds, and then what you do when you look at that. And a lot of our investment goes into ensuring that financial institutions can express their requirement in terms of what kind of scrutiny happens on a payment. So what if the amounts are an anomaly? What if there's a certain value that is higher than what is expected? What if you're paying out a merchant that is publicly listed versus not publicly listed? What if you're paying out a merchant that has a certain number of employees, that deals with certain kind of business, like I said, crypto, gambling? Um, that for us, what's important is to provide the framework so that teams can basically go and express their nuanced policies. Every financial institution has its own policy, and of course, every country has its own policy. So the idea is, how can we kind of express that very easily and get that happen? And that is key. Without that core building block, it's going to become very difficult to blindly move money without having the right checks and balances with it.
I have actually a follow-up question to that, because completely based. That's completely from a curiosity perspective. Uh, because you said, people are moving away from branches. Now they have money in their pockets and getting a bit more decentralized, right? The whole process, the whole institution actually. So, what are your thoughts on the crypto industry? How do you think is going to go on from now? We've seen up and downs, but some people are very in favor of it. Some people are very, opposition of it. Uh, but we still don't know what's going to happen. There's still some unclarity, right? So, what are your thoughts on that?
And we're keeping an eye. So we're not early adopters of crypto. I'm not a firm believer yet that there are hardcore payment use cases that are ready for movement away from the fiat currency to crypto yet. I don't think we're there yet. The reason uh, crypto exists today is because you want to kind of decentralize power. But the current structure, the way we are organized as financial system within the country, the whole point of two participants not trusting each other and a financial institution coming in, that's why sometimes these banks even exist to ensure the trust between two parties, right? So if a bank is there, then the question is, what does the value add? What is the big value add of crypto in that particular context? So there are certain use cases where crypto makes total sense in terms of validation of real estate contract, things where you don't have a central repository and you kind of want it to be a distributed ledger. But in the banking world, so far, I've not really seen a very, very, very compelling need to fundamentally change the way we are doing things, and adopt crypto. I think it's more of experimental in nature. Let's launch new capabilities. There is a need for for CBDC. There's a big need for a cryptocurrency per se, because in the absence of cryptocurrencies, you will just let all other bitcoins of the world come up, and if you don't regulate it, it can lead to all kinds of fraud and terrorist financing and all of that. So there's a need for a certain amount of regulation for sure. The question is, regulation automatically means control, and control means centralized, and you kind of break the whole decentralized thing again. So it's kind of wait and watch, experiment, try, see what sticks, see what works out. I don't see a compelling need to fundamentally drop what we're doing on the core fiat currency parts yet and blindly fully adopt crypto, at least in the payments area.
So what you essentially believe is, we don't need to be extreme on one side. We can have a balance of the centralized, where we have regulations, but
Yeah,
not some control, but not too much control. And
yeah.
we have the decentralized part as well.
Yeah.
Uh,
Basically, experiment and see what is what are the. I mean, invariably, when you experiment, you'll figure out one or two areas where the fiat currency doesn't work well and crypto does, and then launching that in a bigger way makes more sense than blindly, wholeheartedly jumping into crypto. Yeah.
Fair. And I think that's what the world did when that happened, and we've seen the effects, right?
Yeah.
But essentially, that's exactly the essence of democracy, right? That's exactly what democracy is.
Yeah.
That's the correct balance, right?
Yeah, and if I think, yeah, I'm not really I'm not really an anarchist, but I think the analogy would be, if you don't have that especially from finance and movement of money standpoint, if you don't have that regulation and checks and balances, how are you going to ensure consumer interests are protected? Because each consumer can't choose to protect their own interests. That's why we elect a body that can basically go ahead and speak on behalf of us and protect those interests. So if you look at it today, the best example, I really love the way RBI approaches some of these problems. They've come up with regulations to make sure that there's enough liquidity in certain bank accounts, that you don't take money that doesn't belong to you and invest it all over the place. There's a good amount of regulations, which at time makes it difficult for people to kind of do business, but those checks and balances are absolutely important, and I would totally advocate for that in the interest of protecting consumer interests. So when you have that body in place and that body has a good track record, as I would have personally observed in the last decade in terms of what it needs to be done, it's worthwhile investing in how to make those processes more efficient and believe in the spirit of that central body than come up with something that's very difficult for everyone to adopt. But we'll see where it goes. I mean, uh, people have always made these predictions and have continuously been proved right and wrong. So I would still support experimenting and keeping a close eye on what really works.
Yeah, aren't we lucky to be in these years where there's so much experimentation going on, and probably what would be really the future in the coming years, right? What a good time to be born.
Absolutely, yeah, totally. I think we always, every 10 years we say this, we are in the golden era of computing, and I think again another 10 years later we'll again say that we are in the golden era of computing. But it's just a privilege to have been able to see um, ATM transactions in plastic and to see 4 or 5 generations. So the new freshers that we've hired in the organization, I'm not sure if they know what it is like to visit a branch or use a checkbook, because it's been a while since we did any of those. So yeah, we've had some very interesting conversations that sometimes make me feel old and sometimes make me feel privileged to be part of this whole journey. Yeah.
Awesome. So you said you hired some freshers. Are they like some let's say Gen Zs and millennials?
Yeah,
Okay.
yeah, it's difficult to put labels, but yeah, absolutely.
Yeah, yeah.
They come from a very different category of uh, people that in the past we would, let's say maybe 5 years back or even 10 years back, we would hire.
Right.
Um, we're seeing a whole different level of patience, a whole different level of hunger, of willingness to express themselves, of audacity to consider someone far more quote unquote senior, someone far more authoritative, but have the audacity to consider themselves as equal and not be afraid to express their thoughts. And those are all the positive signs. I know a lot of the Gen Z and millennials get a lot of stick for not having suffered enough or working hard as kids and all of that, but the honest truth is they are as hungry as ever. And I'm a big believer in in the fact that we have as much to learn from them as we can teach them, and being able to kind of adopt that, consume that, and give them guidance as much as possible, give them inspiration, but learn from some of the things that they do way better than we do, which is articulation and not having fear of failure. These are very good qualities to have. We should all learn from.
Agreed, very well. So it said that composability, when we talk about future banking, we see composability coming up a lot. If a lot of people will check that. Explain to the viewers what is composability as a term, and why do you think that is the future?
Yeah, the biggest problem that everybody who builds software, anyone who's even built or even written 5 lines of code, the moment you automate any process and build software, building it is honestly very easy. Maintaining it and making changes over time is extremely difficult.
Okay.
A simple example is you can build something up. It's easy to build something up from the grounds up, right? Like a building. But then good luck adding 2 floors at the top, and good luck adding 2 floors at the bottom, and good luck adding 2 floors in between when there are occupants within the building. So just like that, in software, it's so difficult to make changes easily. And I think the biggest challenge that we've seen in the last 10 years is that the market never stands still and the regulators never stand still. So invariably, even if business is booming or not booming, either the regulators influence change or the market comes up with change. Um, Going back to my example of Uber, or for that matter, even Swiggy or any food aggregator, like I said, those days are gone when we would just make a single movement of money from one point to another. Even today, even on UPI, when you move money to a merchant, you scan a QR code. somewhere behind the scenes, the money is being split into a commission for someone and a commission for someone else. And that's just the very nature of digital commerce. So, composability is about how can, just like you would compose music and you would add layers of instruments and beat and come up with a whole finished product that you can actually go and launch. Very similarly, in a payment process or in a payment journey, how can we make things more nuanced? And that's the key point, right? So when you receive a movement, when you receive an instruction to move money from point A to point B, how can you uh, contextually say for this kind of transaction, make sure you have these checks? Is it within the right limit? Is it within this, that? And then split it three ways. And for another kind of transaction, split it four ways, but the fourth split needs to be eyeballed by a human being. So there's so many variants and nuances that can come in. And I think what we want to do is avoid the whole software development life cycle for that. We want financial institutions to be able to go and express this is what we want, and that expression just reflects in the system, and the system automatically kind of works with that. That removes the need to rebuild the whole software or engineer the whole software, and that means you can make changes in days or weeks instead of months and years. And if you don't do that, you just can't keep up with the pace at which the industry is going.
Innovation is the key, they say.
Absolutely.
Understood. And talking about your company, where what are the future plans? I'll be very direct. What are the future plans? What are you looking at?
I think we are keeping a big eye on the US, right? In terms of there's a whole new
Okay.
push towards real-time payments in the US. There's a completely new generation of folks in the US who are consuming digital payments in a very, very different way than we've seen in the last 10 years. So both the regulators and the population is kind of moving towards that. So we see that as a big area of opportunity for us. We also see new trends in India in terms of the business side of it, where you have corporate banking and transaction banking. A lot of new trends, a lot of unsolved problems continue to come up and resurface. Previously, they were too small to be solved or too difficult to solve, but with the new capabilities of automation, and machine learning, it's now becoming easier to solve them. So I would say the US is a big focus area in terms of where we want to grow it. And I would look at uh, payments is so predictable in the sense we know for a fact that there's going to be a lot of disruption in the next decade, but it's also so unpredictable. We don't know what that disruption is going to be. So the plan is to remain motivated and excited to be able to have foresight on what we can solve and solve them today, so that 5 years from now, 10 years from now, it becomes easy to kind of configure that. And I do see Asia being mature. I think a lot of our footprint will grow in Asia over time. But I think US, there's going to be a big, next 2 or 3 years, a big push towards making payments more and more intelligent and more mature.
Okay. Tell us, how do you take your decisions? Any decisions? What is your thought process generally? Help us understand so that one of us could also go ahead and become a CEO later.
I think so. First things first, you have to. Every decision you make is really not only your decision. It's usually consensus. You have to surround yourself with a good team and get the right input from everyone, right? So you have to have people that you trust who are most likely more smarter than you, who have had the time and bandwidth and skill to think through things more than you have and do that analysis of you. At the same time, you can't always have what we call analysis paralysis. It has to be driven by data, but you can't waste too much time. The quality of the decision is not just the decision itself, but the speed at which you make that decision. If you sit on it for years, the consequence of not making a decision is as bad as it is of making a decision sometimes. So you have to keep an eye on that. But it's a combination of data and gut. More than the decision itself, it's about being prepared to live with making 50% of making 100% of the decisions with 50% of the data, but also being prepared to accept 100% of the consequences. I think that is very important. Modeling worst case scenarios, best case scenarios, and being prepared for it is always very, very important. Um, so that's if you personally ask me, I think you have to have it backed by data and backed by calculated risks wherever it is not a no-brainer. But you have to have the the mental strength to deal with negative consequences, um, and of course you have to have fun when it goes right as well. So that's important, having the right team that empowers you to do that. One thing I think I've learned in this process is never bring emotion into the mix. You have to have empathy and emotion for people that you work with, right? I have a lot of attachment to the people I work with, the teams, the hard work they put in, the sacrifices they put in while they're juggling families and kids and commute and all of that. But when it comes to decisions, you kind of have to keep you shouldn't have emotion towards a product or a feature. If it's not performing well, it's not performing well. You kill it and cut your losses and move on, right? So I think emotion, empathy is reserved for humans, not for things that you can't that are not living per se. But you have to balance it. You have to balance data and gut. You have to balance empathy and ruthlessness. You can't just go all in on one way and polarize the company in one direction. That just doesn't work.
Fair. And I think these are the advices also for anybody who wants to go ahead and start there or be a CEO to have.
Um, I would say no fear of failure. I think most of the advice that you can pick up from the internet, you can pick up by learning and reading and studying. But the one thing you probably don't hear out enough is you shouldn't have that fear of failure. If you're good at what you're doing and nobody else or very few other people are good at that, you, your team, your company will invariably taste success. Because if you're good at it, chances are you're doing it a lot, you're doing it well, and you will always find ways and means to monetize that. You're cursed by knowledge. You think that the other person may not pay a certain amount. You think that it's not valuable enough, but most likely they have no other choice. The customers, the prospects have no other choice but to work with you, and you just don't know that at times. So you shouldn't have fear of failure. Obviously, you should spend diligently. You should have the right corporate governance and all of that, but you shouldn't worry about, okay, what if it all goes belly up. That's a scenario you should model, and you should be prepared with plan A, plan B, plan C, plan D, and come out of it stronger. So I would say that fear of failure is what stops us from doing certain things. But most decisions can be reversed over time, if you catch them at the right time. Not everything is permanent in this world. You just have to keep an eye on it and have the heart to undo things when you realize you're not going the right way. But you shouldn't have fear. You should have belief and conviction if that what you're doing is truly game changing. People will line up in some shape and form to consume it.
Wow, rightly mentioned. Last question. For business, looking to implement your automation in their businesses as well, what suggestions or what advice do you have for them?
I think the biggest advice would be to think payments differently. A payment is not about moving money from point A to point B anymore. It used to be that. Today, it is a journey. It's a journey that involves its own twists and turns and detours and toll gates, before which, if you don't do something, you can't go forward. It's no longer a simple step from a point A to point B. And when you think of a payment as a journey, that has its own, uh, you know, climax and things like that, you need to kind of start looking at what can go right and what can go wrong and how you can, get the benefit of that. So I would say, um, typically a financial institution or a bank or a product team continues to focus on their core business, but sometimes it's good to take a step back and reimagine what the experience of a customer would look like, even if whether it's a retail customer or a business customer. um, and when you start to reimagine with blue sky thinking what is the right way to look at, you will realize and discover that um, simple things like movement of money is so sophisticated and nuanced and it can go in all kinds of directions, which is an opportunity for you to monetize like others don't. That's the difference between creating a value proposition that only you have and the others don't. And if you get into the market early enough, you kind of create a wave of new payment offerings that allow you to kind of be different from the crowd. And I think that mentality of figuring out how to be different with the perspective that it can have its own twists and turns, that is really, if you can kind of balance that, you will come up with new ideas on how to make a difference here.
That's a great pitch. And but rightly said, very well agreed to that, and I'm sure a lot of people will be able to relate to that. On that note, we will be ending this conversation. Thank you so much, Sandil, for joining us. Lovely having you. I got my own insights I needed. But no, really, you have an abundance of knowledge. I'm sure that's how your thought process works. I see a very balanced approach coming right through you, and I think that's what has worked for you for sure.
Yeah, I think so too. I think it's you shouldn't get too polarized in one way or the other. I think you need to kind of look at it in completeness, and more than anything, invest in a good team. I think the team will keep you honest and balanced for the most part. Yeah.
Wow. And about the polarized, I think one advice we all need to hear in the social media world, we all do get polarized too quickly. But on that note, we'll come back to company. Great approach. Thank you so much, Sandil. Again, great insights, and we look forward to having you again. And all the best for your product, for your success out there. We really wish you the great successes. If you need anything, we're right here. But thank you so much for anybody else watching. Thank you so much, guys. Stay tuned, and we'll come back with more such conversations. Thank you. Bye bye.
Thanks for having me. Bye bye.
Sure.